Good evening. Ira Epstein, and here we are at 6:10 p.m. Central Time on this Tuesday, the 20th of June, 2023. I'll tell you, I think you're at a very exciting spot in the markets. A number of stock indices, 2 of the 4, are flirting with losing their bullish embedded readings, which means more downside if they don't regain it right away. The other 2 are holding on to it, but barely. They cannot afford from these levels a good, even an intraday good break. They'd have to come back dramatically higher in order to keep that from losing it. Therefore, the bulls, you heard me, the bulls are the ones on the horn a little bit. As we look at all the energies, it looks to me like nat gas probably run its thing. I had one of you write me, Ira, why aren't you covering nat gas more? Well, number one, I do. And I do it in my subscriber video all the time in great depth. I can't cover everything here. Not going to cover just because you don't want to be a subscriber of mine and pay for that to get the coverage, okay? I cover what I want as I think it should be done. I had told you the first heat wave that would come in here, you'd get a rally. I thought it would go possibly 18-day average first when it lost the embedded reading. It did it. And then I thought it might make a run, maybe to the Bollinger Band. Well, just look at the South. You see all that heat. Now, we have drought conditions, though, going on in other parts. And, with the El Nino event that is forming, you can see the Atlantic is picked up with a lot of storms. Will the wind shears stop those from becoming big storms? We don't know. One final thing, it's not commodity related. Hey, all of us, take a moment out and give your thoughts and hopes and prayer for those people caught in that submarine by the Titanic. It doesn't look good. As we take a look on everything else in the bonds and notes, all right, the Fed chair, Powell, tomorrow goes before, I think it's the House committee, and then day after Thursday, he's going before the Senate. He's going to be drilled. What's he going to say? How's it going to impact these markets? My guess is, certain senators and congressmen will be lying in the weeds waiting for him. I can only imagine when Warren tries to get her 5 minutes in on him. That's what you're going to be dealing with. Now, he's just got to say the Fed's reading the economic data. This is what it's doing. The labor market's stronger than they thought it would be. Headline inflation has come down as they thought. He thinks housing was bottoming. Do you see the housing number today? The number of new homes being built right through the darn roof. I mean, bingo. So the builders are smelling that the demand is so strong. It's time to move. And they're betting that, even if there's interest rate hikes, you're probably not going to see mortgage money go up a lot more than it's at right now. They probably have a good bet there. So they need supply to sell. Now we're going to get existing home sales, and we want to see if those are moving at all. They have been sluggish as of recent. So when we look at a weekly area chart of closes for the week, we're a day and a half of it so far. We're down 0.46%, but still in a bullish posture. You can see how the market began last week, peaked, came down. Now, is it going to let go from here? Is it going to consolidate gains? That's really the big question. The pattern in the chart is still one of a lower low and a higher high. I think you see that. Don't have yet the bullish real pattern there of higher lows, higher highs. But you've been bullish as can be because you have stayed over the 18-day average, and you had a vertical price rise. If you don't realize that, you don't deserve looking at me. I'm not going to do you any good. But every single day through here, you just opened, made higher highs all the way through, and finally, last Friday, the market made the higher high, closed lower. The very first time it had done that in a very long period of time. And now you've gotten some more of the washout taking place. You'll see in a minute what I'm talking about. You ran the upper Bollinger Band. Remember, only 5% of the time does the market stay over the upper band or under the black lines. That's what those are. Number 2, I look at momentum. If the red line gets and closes under 79, I can't tell you to be long anymore. If it doesn't and holds here and starts up, you still have the potential of getting to the upper Bollinger Band. It needs a piece of information to run on. It's not going to do it on its own. That catalyst just could be whatever the Fed says tomorrow. He's liable to come out very upbeat, and the market's going to listen to every word. Remember, this is just going to be like another press conference of the FOMC meeting. We'll see what he says. So that's what I think can happen there. The NASDAQ is flirting with losing its reading. It's been the powerhouse. Any close under 79, I don't see why you can't make a run for those 18-day averages. The Dow has lost it, but did it do it on the close? So let's take a look together. Let's go back to the closing price. 79.76 is not lost. It could be lost now. That's what you look at. Under 79 is my rule. And the same thing here if we take a look together, and you'll see. On the close, you were 79.05, so now you're losing it. The odds are those two can lose this. They need to get a big up move. Do they wait and pull the NASDAQ and the S&P down, or do the NASDAQ and S&P get a rally and make these rescue themselves? That's exactly where you're at. But I don't look for a big break. I look in the Russell that if the market can break down, I'm looking for big support, 1858 to 1850, let's call it. And from where you're at right now, that's only 34 points. So it's not as though I think you're going to go into a state of collapse. A pullback, yes, and a trade top might be made. That's what you got to look at. In the bonds, you have an outside day up. The importance of an outside day cannot be underestimated. Unless today's low is taken out tomorrow, which is obviously the Wednesday trade or Thursday. The odds favor, if it goes up, it'll make a run for the resistance in the 129.10 zone, wherever that number is right up there. And the further resistance, 129.14, which is the 100-day average. That's going to be the key. If this is taken out, then I think you're going to 125, 25, the lower Bollinger Band. In the 5-year note, you're just staying very oversold and you're not breaking. That could be a trap. This market might want to move itself higher now. Why? Markets that don't embed and lay there often start correcting the oversold. And if they do, momentum often leads price. I'd look for the 18-day average of closes. In the dollar index, we're in the first thralls of the dollar converting itself to bearishness. What do I mean? Both numbers are under 20. Let's go back. On the close, both under 20. So that could be. We got, for sure today was the first day. The day before, though, you weren't. So you got 1.25 days of it under 20. You have to get through tomorrow, which is the Wednesday trade and Thursday trade, keeping the market down here to embed to get me very bearish. Other than that, the market might want to challenge the first time under the 100-day average in green and make a run back to that. That would not be a surprise to me. In the eurocurrency, it's the flip-flop. It's trying to embed. So if it can do that, fine. Now, what's holding it back is you just got over the 100-day average and you don't have the 18 close to it, so you don't have that crossover happening. Therefore, the market's sort of on its own, trying to figure out with the dollar, do we go this way? Do we go that way? What do we do right now? You've had your big run up here. If I step back to the dollar, you've had your big break in the market there. Do they consolidate those and continue in that direction? I think it's the real question that you have to ask yourself. In the British pound, what can I tell you? You're going to get tomorrow, I think, some CPI numbers. I haven't seen them, obviously, but I know that Bloomberg called me and they want me to do a story on it for them, and they're a podcast, and I will do that once I see them in the morning. And I'd be watching that. Now, I think tomorrow, if I'm right, Wednesday, I believe if you're watching me in Australia, I'll be on Aussie Business TV. And please tune in. Chicago time, it's a 5:30 show in the evening. So it's prime time there. So please watch it. I mean, that's your early morning drive, not middle of the morning. That's a real nice time zone there. And I get asked a lot of questions. Higher lows, higher highs. You can see how the market is backing off, but you're embedded here. So until it gets the red line under 79, this market is a buy, not knowing what the CPI is going to do. And I'm convinced they're going to go with the 25 basis point hike. I don't see how they can't. They got wage inflation. They got all kinds of inflation going on there. They got some problems. Bitcoin, now watch, this is very important. So what the market did is this is how you'd been. Oversold, you hit your targets, you never did embed. That simple. If you clear right now, 26,555, and you got up on Friday to what number? 2660. You made the higher high. Now you're out of the pattern of lower highs, lower lows, and you're oversold and you've hit your targets right through here. These 2 days, and even today was another day for good measure. To get that is no surprise to me. Zero. I think the shorts were out, and I think the market said, hey, don't have to fall apart. Things aren't as bad as everybody thinks, but that's a heck of a gain, 6% in 1 day. In Brent versus WTI crude, are they going to try to get back to the 18-day average? It certainly appears that's what the market wants to do. And where are you in this market? Well, you're basically in an uptrend, higher lows, higher highs. You had a big outside day today. A trap for bears. Bears would be taking out today's high, and I think that would kick you right up there. Don't do that, and you're probably going to waffle at the 18-day average for a while. I think the same thing true of the WTI crude. Just don't see anything one way or the other there. In gasoline, as we talked last week, I said, hey, this could be it. This could be your rally for July 4th. You don't wait for the holiday. The orders have come in. And I think you get to the Bollinger Band, you're overbought. What do you do if you're long? Bye-bye, Miss American Pie. And look at how it falls back to the 18-day average. The trend is up, but you're too overbought to want to be a buyer at this point. In the gas, come on. You lost the embedded reading. The first goal was the 18-day average, and I know what I said here. I said if it goes, maybe the Bollinger Band. It's exactly what happened. And I pinpointed, I said it'll be off the first heat. That was the call. So if you're listening to this, that one gentleman or gentlewoman that wrote me with that, because everybody's got a code name. No, I didn't miss it. I devoted enough time here. I devoted a lot of time in the subscriber video. And by the way, there's that blue button right there. We have people that just hit that. They come in and they can see me first thing in the morning. I recorded about 5:15 in the morning, Central Time. That's AM, Central Time, the futures video. That's up and posted well before, 10 to 6, something like that typically. And then I start recording at 9 on the head, the Spider ETF. I want all the morning reports now in that. Why? Because spiders and ETFs pay attention to what the futures are doing. Let's now get the reports. I've already told you what to do via the futures, and you only open at 8:30. Let the market get that first wave of money, the reports, then let me do the recording and get it in your hand. I think you'll find it well worthwhile. The package we put there, you can get both of these recordings so darn easy. It's simple. One final thing for those of you that are futures traders. You know, the one thing I know is that not everybody should be self-directed. You think I'm the only one? Do you not see the ads with Schwab? Hey, call us. You'll talk to an options specialist. They've got that. Well, we do that in futures, my friends, with people that are highly skilled. So you have your ideas, you talk to them each day, they work with select clients, you'll see if this is the right fit for you, and away you go. The commission program, low. We're not out to do that. We're not Fisher Investments where we do better as you do better, but we really work hard for you, okay? And that's what you'll see. We're not going to manage your money. You're not going to be able to say, hey, do what you think is right for me. Won't happen. Don't want to hear that. Here's the game plan. Here's what we execute. You don't like it? Let me get back to you with something you do like, and we work from there. Can I make it any easier? So all you need to do to find out more about this is talk to us. Our phone number, really simple, 866-973-2077. Give us a call. We'll work with you and see what we can set up for that. When you call that number, just say, hey, I'm interested in talking to somebody about how you work with your clients and maybe opening an account. Simple enough. I'm Ira Epstein. You have a great day. I'll talk to you tomorrow.